I'm Neal Dempsey, and this is a 6-step roadmap to an IPO. The question is, what is the valuation of the company at its IPO? And that's always the ultimate question that everybody wants an answer to. And there's no real specific answer until you actually start trying to sell the stock to potential investors. But there are some fundamentals that come into play here, and the major fundamental is the last round of financing. The last round of financing at Spivens Inc. was $640 million. So the company, as we speak, before it goes public, is worth $640 million, because that's what the last round was. That's what the investors paid for the stock. And so the investors, as well as the employees, are looking for a price above $640. And so there's always a decision between the bankers and the management team to get the highest possible price. Joe says, listen, I've got the #1 company. You know, I'm Joe. I got the #1 company in my space. I've got sales of almost 100 million. I'm growing at 30%. I'm positive cash, and I'm the outright leader. This is worth more than Y. And you're trying to tell me that we should go out at X? That doesn't wash. Period. Well, Joe, we hear what you have to say, but there's lots of risk, and we've got to sell this stock to 20 or 30 different firms, and they've got to agree that there's big upside when it goes public. And at the end, the selling of the stock is in the capital markets' hands. Capital markets people, the sales force of the investment banks. These people are on the phone selling the stock to the potential buyers. On the next episode, Joe Spivens promises to keep the IPO a secret.